Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi, welcome back to the COB. I'm Danny Akuye with
Juliet Sarli. Happy Friday, Danny.
Yes, happy Friday. We're being a bit cheeky and having a happy Friday.
Cheers.
Prosecco.
Cheers,
so if we go a little bit awry, you know what's happened.
Indeed.
It went to our heads.
Whoops. Oh, my hair isn't very neat either. It's all gone to our heads already. Look, we are starting December on a bit of a back foot, I guess, but yesterday we had that really good rally into the month end.
Absolutely. It does look like the market has tried to recover some of the losses. So the COB 200 is actually in positive territory,
just moved.
almost by 1 point. And the ASX 200...
it's about 11 points lower, I think.
Exactly, almost 0.2%. So we did see after those... is it the Caxin? Chinese?
Taishin. It's a hard one to say, but yeah, after 8 years in Asia, I finally learned how to say it. Okay.
Taishin, and their PMIs were a little bit stronger than expected, which looks to have released some buying support for the market. So let's have a look at the three themes of today. And well, there is a term in finance, not in other things, called pump and dump. And that is when somebody pushes the stock up and then they sell it. Of course, it was in reference to the window dressing that Jules and I conveniently forgot about yesterday, being the last day of the month. And then we did see selling pressure come into the morning session of the ASX 200.
Yes, and of course, we're looking ahead now to the RBA meeting next week. I mean, we had the inflation read this week. We know the quarterly one's going to be a lot more important, but it does seem that more and more people are saying, look, December is going to be a hold. So of course that will be the key theme for next week. And then oil flush, Danny, at OPEC Plus, disappointing a little.
Yes, it does look like it has disappointed. I mean, it's a bit like herding cats, isn't it? Getting them all to coordinate, cut their production, and of course now it is voluntary cuts. And of course, I suppose if this is generating revenue, the question mark is, do you really want a voluntary cut? Just speaking there with Daniel Hines from ANZ. So this thing, the concept of an oil flush, is when Saudi Arabia floods the market, and they did it when the frackers came online in the US, and it actually failed desperately. So he doesn't think they're going to resort to that. But nevertheless, the market clearly disappointed with what has basically been voluntary cuts.
Yeah, let's have a look at the sectors, because today all 11 were lower, and we know that there was weakness in tech stocks on the NASDAQ, and obviously those higher bond yields, despite the PCE inflation read in the US, did see some weakness on our tech players as well. WiseTech Global, they're down by about 0.8%. Technology One off 2.6%.
Absolutely, and let's have a look at the energy stocks and see how they performed in the face of what was a bit of a disappointing OPEC Plus meeting. And it's just interesting, both Ampol and Viva Energy were in the green, and some slight profit taking coming into Woodside, Santos and Beach.
And just having a look at utilities, look, they were probably the best sector today, even though we still saw weakness coming through when you look at the sector as a whole. What are you seeing on your screen? I think I was just looking at the ASX sectors. Actually, it looks like a couple of sectors moved higher towards the close. So industrials and utilities a little bit stronger. So you saw some buying coming through from APA Group, Mercury New Zealand, and of course we've been continuing to watch that Origin Energy story as well. The shareholder vote will be on Monday.
And the long-running saga continues. Now, let's have a look at some corporate news. And SSR Mining is set to sell a Peru-based gold and silver project to Highlander Silver. And we can see that share price was up just over 0.3%, closing around $17.81.
And Coles will look at closed down 1%, 15.17. Australia's consumer watchdog waving through plans by the supermarket owner to purchase milk facilities from Saputo.
Okay, now this is really, I thought, quite interesting. AustralianSuper seems to be in the media, shall we say, quite a lot, and they have just purchased a 5% stake in Pilbara Minerals. And we do know that Pilbara has been one of the most shorted stocks on the ASX 200. Looks like it's closing out at $3.62.
Core Lithium, meanwhile, it was about nearly 2% lower, being downgraded to sell by analysts at Citi today.
And Premier Investments was effectively off to the races after some very upbeat comments from Chairman Solomon Lew about the extent of the Black Friday sales. And the sales came in much higher than analysts expected. And of course, that was stock of the day on the call. And I guess we're David Novak from Wealthwise Education and Adam Dawes from Shaw and Partners.
Black Friday, Cyber Monday sales, and then they've obviously got a couple more events coming up. So it doesn't look too bad for Premier Investments. We've got a buy on Premier Investments at Shaw and Partners. So I'm going to stick with my research guys and say it's a buy. Only reason is I think I back management, and they are very, very good at what they do. So
So look, the trend is sort of it's not terribly inspiring. They had a big jump back in August when they reported. And it's just been going sideways since then. So, at best for me, it's at least a hold,
Yeah.
possibly a buy. But I'm not big on the retail sector right now, personally. So it's not a buy personally for me, but it's definitely a hold if you've got it. It's got a good yield, fully franked yield of whatever it is, 5% or something. Just under 5%. Yeah. So it's not trading on ridiculous multiples for a retailer. And they're still kicking some goals here. So.
Okay, so our guests do like Premier Investments, but David Novak he doesn't really like retail. So both of them saying a hold for Premier Investments. Interesting that they did, or Solomon Lew did flag possibly selling out the businesses and trying to release some value, but we'll have to see whether or not that actually happens.
All right, let's take a look at next week. Of course, we are now in December as of today, but the RBA board meeting, as we mentioned, it will be obviously the last one for 2023, but in fact, the last one until February, because the RBA doesn't meet in January. Only a couple of weeks or so ago, people thought this could be a live one. Danny, as we mentioned, it really doesn't seem like it will be now. No. Very much it looks like the RBA will hold at 4.35%. We've also got GDP figures. All of that will factor through to ANZ job advertisements, international trade, and the inflation gauge. And I think we have our special guest, Dr. Shane Oliver from AMP with us now. So Shane, always good to see you. We're just looking at the overall read on markets and what we've seen, particularly as we saw that really big run up into the end of November, and then I guess a bit of a flat start to December. Probably not too much of a surprise given what we had from Wall Street overnight and that inflation core PCE gauge.
That's right, but there's a couple of things to note here. I think the news over the last week has been unambiguously positive. Particularly on inflation. Commentary out of central banks globally in the US has been far less hawkish. All of those things are very positive for share markets. And likewise in Australia, we saw some lower than expected numbers, which of course have substantially reduced the prospect of a rate hike. Little chance, according to the money market, next week, but the money market's only pricing in something like a 25% chance of a hike by May next year. And thereafter it starts to diminish. So we have seen some pretty good news there. Problem with share markets, though, is, of course, they have run very hard and very fast. Global shares, US shares, up 8.9% in November. I think one of the strongest Novembers on record. Global shares up something like 8%. So very strong gains there. Now, we were up 4.5%, but traditionally the seasonal strength in Australia doesn't commence until December. November's often a weaker month. So the other point to note, of course, is that markets are a little bit overbought. There's the chart there, the seasonal pattern. We saw the classic weakness into October that you often see, particularly starting in August in the US and then September. And then we saw a rebound in the US in November. And of course, half-hearted one in Australia, but we did see one. Australian strength normally kicks in December. So we've still got more seasonal strength to go. But I think the point about markets is they are a bit overbought technically, particularly globally, not so much our market. And that does mean we could go through a bit of a consolidation. But I think the broader picture, in a macro sense, is actually now quite positive with pressure coming off central banks. And I know a lot of people say, well, Australian inflation around 5% in Europe, 2.5% in the US, 3%, Canada about 3%. How come we're so bad? Well, just bear in mind, you go back a year ago, they were a lot worse than us. So they rose earlier than us. They peaked earlier. We're following those countries with a lag, and I think we will continue to do so.
Shane, do you think the Fed, what will be the primary factor to make the Fed ease? Let's put it that way. Is it going to be slowing growth, slowing more than expected, or rising unemployment? Or is it going to be that just real yields are just too high? So it's basically too control. Well, it's the monetary policy is too tight as inflation comes down.
Look, I think it'll be a combination of those things. Fed Governor Waller through the week, and he's typically hawkish. He seems to be becoming a lot less hawkish lately. He did point out that if inflation continued to fall, then they could envisage easing in, I think he said 3, 4, 5 months' time. A bit vague there, but going to the middle of the year, they could envisage easing. So it looks like inflation is the main thing. But they'd probably also want to see the labour market become cooler before that happened. You can just see how quickly those numbers have come down on that chart there, which is US, Europe, Canada, UK, Japan. Japan's a bit of an outlier, but they all went up very rapidly. They've all come down very rapidly. Europe in particular was almost 11% go back a year ago. So these countries have seen a massive improvement. But they'd still be a little bit wary at this stage. That's why they're not going to cut yet, because A, they're not yet at their targets, at least on their core rates, they're certainly not. And secondly, that they would want to see more evidence that labour markets have cooled, the demand has cooled, and therefore the back of their mind is sort of some reference to the 1970s that they eased too quickly back then, and then inflation wasn't brought under control and then rebounded again quickly as soon as the next upturn came along. So I think they'll probably hang in there with tight monetary policy for a while yet, but ultimately the easing will come with a combination of lower inflation, more confidence that it's going to stay down, easing inflation expectations and easing growth.
Let's talk as well about the house price data and, of course, the effect of the interest rate hikes we've already seen in the country on the market, because it was interesting that on one front you did see November up by 0.22%, so still seeing these records on a median average, but it does start to show some sort of slowdown in terms of some of these interest rates working a little bit. How did you read the house price data?
Well, I think the clear message from the house price data is that high interest rates are starting to get the upper hand again. We saw this odd rebound this year. So if you go back to last year, prices peaked, I think, in January. Then we get that big slump going into... Can you hear me?
We just lost you a little bit. Are you underwater, Shane?
Should work now. Does it work now?
Yeah, we can hear you, just not as well as we could before.
Well, yeah, my sound device, I think, might have run out of battery. I don't know. But anyway, these things happen here.
Oh, you're back. You're back.
Yeah, when you do live TV. But so if you go back to last year, we had that high. Market fell from about May onward, which was around the time interest rates started to rise. Of course, prices came down something like 7-8%, obviously more than about 11. The numbers get revised a little bit now, core logic. And then we've seen a rebound. High in 3 cities, Adelaide, Perth and Brisbane. But looks like they're now starting to come under pressure again, particularly in Sydney and Melbourne with loss of momentum. And that, I think, just to be, we've had the boost from the supply shortfall, but now we're starting to see higher interest rates kick the problem again. So my little device keeps going ding, ding, ding.
It's Friday. It's Friday.
It's Friday. Plugged in, but for some reason it wasn't getting the charge. But in any case, I think that we've seen the rebound. We're now going into a weaker period for the property market. Sydney and Melbourne prices will probably come down next year, quite possibly Hobart and Canberra. Also look a little bit on the weak side. And then the other cities might hang in there a little bit longer. It seems to me that the bottom line here is that if you're a typical home buyer coming to the market now with a 20% deposit on average full-time earnings, your capacity to pay for home is down 30%.
that was offset over the course of the last 12 months by various factors, like Bank of Mum and Dad, borrowers and so on. So I think those supports are now favourable, and we'll see renewed weakness going into next year.
Yeah, I actually read, Shane, in another publication today that white-collar jobs are starting to come under pressure. So clearly, once, I suppose, people have less confidence in job security, the slowdown could possibly accelerate. Is that kind of how you are looking at it? How important the labour numbers are and the job security as we move into the next phase of the cycle?
Look, I think that's very important, and Governor Bullock referred to that. I mean, there's comments which became somewhat controversial on Tuesday that the household sector was doing okay, was doing fine, nothing to worry about. Those sorts of things are sort of all right in terms of when she's referring to people making their mortgage payments. But she did say that obviously employment is a big one, and if employment comes under pressure, then that situation could turn around. I think many Australians would take issue with those comments because I get the impression that many Australians are actually struggling with the high cost of living and interest rate issues present. But I guess the point she was trying to make was, well, they're not defaulting on their loans yet, but they are having to cut back spending. And of course, the real problem will come if we go into next year and the jobs market weakens substantially. At the moment, we're seeing the sort of anecdotes that you referred to, Danny. We're also seeing falls in job vacancy come off, much like you're seeing declines in job openings in the US. And all of that points to a weaker jobs market. It just depends on how weak. If it's just a slowing in jobs growth and unemployment goes up because of more migrants, but it is people who are already here keep their jobs, we may get by. But if the RBA miscalculates, we end up with a harder landing, and that's certainly the risk here, then I think that will ricochet back to the property market as more people will really struggle to service their loans if more people start to lose their jobs. So it's a big one to watch as we go through next year and could then accentuate the downwards pressure that we're starting to see to some degree in terms of property prices.
Finally, Shane, you know what I'm going to ask? What's on the radar for this weekend? What are you listening to? What are you reading?
Well, interestingly, I'm still reading that fantasy novel I referred to last week.
It was a thick one.
It was a very thick one. But interestingly, usually there's a couple of points worth noting. I have been reading this and I finished it a while back. And I found it quite interesting. If you go down to the back of it, it says try reading every day. And it actually says something to the effect that research from Yale University found that those who read 30 minutes a day live on average 23 months longer than those who don't. So, one of his just one thing is do a bit of reading each day. But one thing I have been gradually getting through is that Paul McCartney, about 2 years ago, put out a publication called The Lyrics, and massive publication going through a lot of his songs, fairly thick, lots of pictures and the words from each song. And then he explains what each of those songs are about. So usually I try and go through one or two of these a day, sometimes flip. So that's why it's taken me 2 years to get through the publication. And there are some amazing insights into what drives him. He was often criticised, often gets criticised as being too sunny, too optimistic, too cheerful. The albums would often end with something like Through Our Love or Come On People, really uplifting stuff. But his reasoning was that he sort of worked out you get these rough times and then things pick up again and you move on. And as long as he has this ability through his reach, he calls it, he'll try and remain optimistic, and hopefully that rubs off some people. So, I mean, to some degree, I sort of relate to that. And it's actually a fairly sensible logic. And I must admit, many Paul McCartney songs have made me feel happier at times.
Oh,
So
that's so lovely.
But you're going to live till 205 with you standing on one foot and reading 30 minutes every day. You're doing all the right things.
I've got to do a few more though. He says do 1 minute of, he calls them press ups. In Australia we call them push ups. I did manage to do it. I could get them done 40 in a minute or something like that. But often days I forget, so I've got to get more religious.
Walking backwards on a treadmill is also the latest thing. I've been doing that one. It's very good for balance because we lose our balance as we get older. So walking backwards is really important.
Shane told us once before he cleans his teeth standing on one foot.
Yeah, exactly. We could
I've
stand.
been
I've got
starting
high
that too.
heels on, so it's a little bit harder. I'm in high heels and
I
I'm
can
standing.
drink wine on one foot. Look at me. All right.
Shane, thank you so much. We're getting a bit silly here on this Friday afternoon. A pleasure as always. Thank you so much for joining us.
See you next week.
Thank you.
Okay, too much fun there on a Friday afternoon.
I think Apurva wants us to get to the leaders and laggards.
Exactly.
Let's do that.
Paladin Energy, okay, that one's been sold off over the last few days, so bouncing almost 7%. Neuron Pharmaceuticals up almost 5%. Iris continuing to go up. There was a broker upgrade. We talked about Premier Investments earlier on, and Helios up 3%.
And the laggards today were quite a lot, but let's have a look at the top ones. Chalice Mining, I think Bega might have been there too. Sayona Mining off by 5.3%. Tabcorp off by 4.1%. And then just having a quick look as well at some of the
Small caps. Yeah, so the small cap are leaders. 4D Memory up almost 15%. Elevate Uranium, I must admit, that's passed me by, up 14%, and Beacon Minerals up 11%. And let's have a look at some of the small cap laggards.
Yeah, Legacy Iron Ore down 12%, BrainChip off by 11%, Sierra Resources off by 10%, and BlackRock Mining off by almost that amount as well. Now, we ran through what's ahead next week, Danny. What about on the global front? What are we looking out for?
Yeah, good question. What are we looking out for? I think we've got Chinese inflation and the China Caxin service. No, that's today.
So
no,
that's the services. But so when you see that CAI, you go Tai, and then the X is a sh sound.
Okay.
Taishin.
Okay, Taishin.
No. I'm just trying. I'm teaching you. I'm teaching you Mandarin.
China Taishin Services. Purchasing managers, also US consumer confidence, US non-farm payrolls, and US services purchasing managers index. Okay, let's have a quick recap of the market. And the ASX 200 down 14 points to 0.2% at 7,073, and the SIBO 200 actually ended up almost 1 point. So there we go. And just worth noting that on the month we have seen the ASX 200 is actually up by 3.4%.
On the month, as in today, or you mean over November?
Over
the 30 days.
Yeah,
I'm sorry. Okay,
exactly.
It's Friday. We're going to leave you to your Friday, and we will be back, of course, with all things markets from Monday, 9:30 on Ausbiz. You can catch up with all our great interviews over the week at ausbiz.com.au.
Have a great weekend.